XRP has had 4 weeks in a row of green candlesticks. I'm going to show you how we got here and if there's news out there that could give us a 5th week in a row of green action. And John Deaton, representing over 75,000 XRP holders, issues a dire warning about further regulation from the United States government. And how chilly has it been this crypto winter? We'll wait until I show you a series of layoff stats that went rampant through the crypto Web3 space. Happy Sunday, crypto and Web3 fans, and welcome to your premier place for Web3 journalism. Look at what I got up on the screen. The price of XRP, 1, 2, 3, 4, working on the 5th week of green candlesticks. We'll get into that story. But first, the heat map XLM sitting at 9.3, above where we need to be. XRP sitting at 41.1. ETH 1609, and Bitcoin, the biggest mover out of the group right now, sitting at 23,532. Crypto's making a big roar before Jerome Powell and the Fed on February 1st come out with their next rate hike announcement. Despite recent market revival, these crypto companies have dismissed more employees. All right, so we're going to talk about how we got to this point, right? How did we get to the point where we were able to make 4 weeks in a row of green candlesticks? Well, it took a lot of pain, and then we're going to talk about, hey, can we continue the trend? Thousands of people have lost their jobs because of unfavorable macroeconomic conditions. The FTX crash obviously made it worse and caused a domino effect that triggered more layoffs. Here's a list of crypto firms and how much they've trimmed. All right, you guys ready for some stats? Remember, as always, any article you see in this video will be linked in the description below. So if there's something I read and you're like, yo, daddy, hold up, what'd you just say? Well, you'll be able to read it. The Argentinian exchange Lemon Cash cut 38% of its personnel. Mexican crypto platform Bitso dismissed 25% of its staff. San Francisco-based Kraken also added its name, reducing its headcount by a third. Bybit joined the bandwagon in December, cutting 30% of its headcount. Australian exchange SwiftX followed suit with a 50% layoff. Gate.io and Huobi did not have the best start to the year, respectively getting rid of 50 and 20% of their staffs. Coinbase, one of the biggest exchanges, laid off for the second time, with blockchain 28% and 20% for crypto.com. Other trading platforms that recently reduced the size of their teams: Coin, DCX, Amber Group, Gemini, and Luno. Multi-chain network supporting Web3 applications, Octopus Network, laid off 40% of its team members. SuperRare slashed 30%, and Consensus took the extremely difficult decision to let go 96 of its employees. What about banks and financiers in the crypto space? Silvergate Capital, a crypto-focused bank headquartered in California, trimmed around 200 people, 40% of its workforce. DCG, a venture capital company run by Barry Silbert, who's in a big financial hole, by the way, recently dismissed 30% and closed its wealth management division. Buenbit slashed 45% in May. BitMEX fired 25% and another 30% months later. So that's how we got here, right? That's how we're able to get to these green candlesticks, as companies out there make the tough decisions to let go of staff amid the crypto winter and lower trading volumes, right? That's how a lot of these exchanges make their money, is with trading volumes. That's how a lot of crypto itself is money. It's just money moving back and forth, right? Kind of hot potato within the degen trading world, but not all trades are degen, are they, everyone? But that's my point. My point is we had to get through some nasty pain to get to 4 weeks in a row of green candlesticks. Now, will this continue? Well, we've got several things that we got to point to. First, we got Deaton coming out saying, yo, White House, US, they're going to clamp down hard on crypto. Okay, so that kind of long run makes us think, okay, maybe we won't have as much of green candlestick action. We've got Jerome Powell and the Fed coming out on February 1st. We know how that's going to work, right? 25 basis points. We're going to continue working on green this week. We come with a 50 basis point hit from JP and the Fed. Well, we better call him daddy. That's going to bring us back to the red, into the basement. That'll stop that streak at 4 weeks. So we do have some things, both positive and negative, in the near term as well as midterm horizon for us to look at when it comes to crypto prices. Now, the reason I wanted to bring up all these banks and all these layoffs here was to show you that this is part of crypto Web3 reaching version 2.0, sustainabilities of companies. We saw this in the dot-com bubble. In the dot-com bubble, what was really interesting about that was all the money they spent on advertising. These companies were spending millions, hundreds of millions of dollars advertising products that they were losing money on. And what happened was, when all of a sudden those checks started bouncing, these companies had to shut down. What you're seeing with the crypto winter is very similar. Think of all the people that spent money on stadiums, naming rights, jersey sleeve patches, FTX with Major League Baseball umpires out there. Thank God I won't have to see that this year when I watch my White Sox play. But all those companies spent exorbitant amounts, right, on getting their name out there, not developing their product, right? Not making sure that their product and pathways are profitable. So what you've seen in the .com is exactly what you're seeing right now with crypto, and that's why I brought up all these firms, right? It's not just one firm. It's all of these firms here that are letting go of staff in order to make money through this extended crypto winter, right? How much cash do you have in your back pocket to withstand the crypto winter? But now we swing on over to Deaton. Ripple Pro lawyer John Deaton's crypto prediction sparks concern. This is from the White House. The White House published a statement titled "The Administration's Roadmap to Mitigate Cryptocurrency Risk." Now, honestly, I wasn't too shocked by this because we know the current administration of the White House is not reining in Gary Gensler and the SEC. They're letting him do whatever he wants, right? CFTC is out there doing whatever they want. We just saw a big circle jerk with DOJ out there patting each other's on the back. The White House right now is not doing anything. They're not stepping in the way of any branch regulation or any entity regulation whatsoever. So when I saw this come out, I was like, yeah, okay, more of the same. But Deaton's worried. Deaton's worried long-term wise because these next 2 years leading up to the next presidential election could be extremely brutal for the regulation of crypto, especially if LBRY does not get help on the 30th and if XRP Ripple Labs loses their case versus the SEC. Well, let's get to the quote. We've spent the past year identifying the risks of cryptocurrencies and acting to mitigate them using authorities that the executive branch has. The legislative guidance provided by the administration called on the U.S. Congress to step up its efforts. So now we're getting more pressure on Congress to start putting more regs in. Now, regs are a good thing, right? Because from regs we can build, right? Without regs, VC's not going to get in. Institutional grade money is going to stay the F away. You won't ever see FDIC insurance or anything like that. So regs are super important, but they can't stifle the growth, right? We can't get to the point where these green candlesticks get stifled by over-regulation. For example, Congress should expand regulators' powers to prevent misuses of customer assets. They already have those powers. We just have to define what's a commodity versus a security versus a currency. So we don't need to give these regulators more power. We just have to give them a better framework to operate within, right? Because I think that's what a lot of us here are saying is like, yo, the traditional security stuff does not fit what we're doing cryptocurrency-wise. So we can't use these outdated laws to make it happen. We have to use current, updated standards. So that's the worry here that Deaton has, and that's kind of my worry here, is when they say, hey, Congress should expand regulators' powers. No, define it first and then expand it later if you need to. But you don't need to expand it once you actually properly define it. So now, will these candlesticks continue? Like I said, hey, 4 weeks in a row of green candlesticks is a welcome sight to see. But look at what happens when I zoom out. We are still so far away from where we used to be, even 8, 9, 10 months ago. In fact, look at April, all right, before all the Luna junk happened. XRP was rolling in the mid 70 cent mark, and we're so far away from that right now. We need so many more good things to happen to get us to that point. So if we have the case, right, we know that's a positive. That's a no-brainer right there. Jerome Powell in the Fed's decision, 25 or 50. We know how that's going to work out. Further regs from the U.S. government, we know how that could work out, right, especially if they just let the SEC keep doing over and over and over each of what they've been doing. So there's definitely some things out there that could slow down this rally. But we also have the positives that these companies out here, and that's why I brought it up, are doing the right things when it comes to cost control, being able to withstand the crypto winter so that the whole market, the whole Web3 community, the whole Web3 ecosystem can withstand the crypto winter and emerge on the other side even stronger. So yes, we may see some green candlesticks turn into red here in the near future, but it sure looks like the bottom is priced in, and it sure looks like these crypto Web3 companies out here are doing the right things in order to curb costs to make it so that they can live to fight another day. And just an FYI for everyone, that list of layoffs, that was just one article I found that had a really good condensed version of it. There are so many more out there that we've covered on this channel. So the crypto winter, even more broad than what you saw here. But that's part of the maturation process of this, all right? That's what crypto Web3 had to go through, right? When the boom was happening, companies were spending money just stupidly, right? Just throwing it at whatever they could. But then all of a sudden, when trading volume went down, as price went down, as their assets, right? Because a lot of these companies held their value in these crypto assets using ETH, Bitcoin, right, as assets. What happened was as that value started going down, these companies were like, whoa, crap, we don't have as big of bags as we thought. We don't have the cash in our back pocket like we thought we used to. So then they started having to make aggressive cost-cutting actions. Those aggressive cost-cutting actions is what's leading the market now to start getting more green. Macros are getting better. CPI data has softened a little bit. Even Jerome Powell and the Fed, which like 3 weeks ago were like, yeah, we're going to drop another 50 on you, are like, well, I don't know. Maybe we could get away with the 25 because the economy is starting to cool down. So the industry as a whole is making the right decisions out there, the right moves to get crypto and Web3 to live, to survive, to fight another day. And that's what this is all about, incremental gains to get us there. So yes, expect some red candlesticks because things can't always be green. But the overall outlook right now definitely looks a lot more green, a lot more positive potential than even what we were talking about 3 weeks ago. And all of this has to do with macroeconomic conditions that have been changing around the globe that this channel here has been keeping you up to date on. That's why you hit the subscribe button, because of the value of this channel, quick content with a lot of juicy bits. That's why you hit the like button to help this channel out algorithmically, to get to more people out there. Drop me a comment if you want to let me know what you thought about this video, whether positive or negative. What I'm going to do is leave you with this video right here as a gift in return. YouTube algorithmically suggested for you. I've got one hell of a workout fitness test today, so I'm gonna knock that out. So until more news breaks, you cool cats, have a great rest of your day.